sponsored by the Securities and Exchange Commission of Nigeria.
Hello and welcome to Eye on Nigeria's capital markets. The show tracks activity in West Africa's oldest and largest stock exchange and its broader capital markets. I'm Wale Famurewa. In today's show, we track activity in the insurance sector. The industry has underperformed the broader NSE by a significant margin over the last few years, with some insurance companies now trading at or close to their nominal values. So are these companies really that worthless? And what are the changes that are driving investment opportunities in this somewhat moribund sector?
I think to understand the problems of the insurance industry in Nigeria, you have to go before SAP, before Structural Adjustment Program. The industry was strong because the currency was strong. And the life insurance industry in particular had substantial savings relative to the economy of the time. The Structural Adjustment Program reduced the value of the Naira and made long-term savings unattractive, which those policies then represented. The second thing was that the insurance industry did not have a response that could hold, the loyalty of its customers.
The general view then, was that insurers are very quick to decline claims, and that the moment you have a claim, that is when they will point to the fine prints and look for all sorts of ways of avoiding the payment of the claim.
When insurance companies don't make too much money because of these factors, capital does not flow to it. And therefore, they had remained with very small capital, and everything, all those three factors have conspired, to make the industry weak.
Nigeria's insurance sector had been on the decline until the early 2000s, when far-reaching reforms predicated on new legislation for the sector led to its recapitalization and a wave of mergers and acquisitions.
The Nigerian insurance sector has recorded significant growth over the last 10 years, roughly. And if you just think about it in terms of a compounded annual growth rate, it's been about 23% or so. So it's significant. And there have been a number of drivers. One is just benefiting from the broader growth in the economic environment, improving socio-political stability.
Perhaps from about 2000, maybe 2003, when the government did the first increase in recapitalization, the capitalization of the insurance industry. And they moved the capital to, I think in 2002, to 100 million for companies. And then again, they moved it in 2003 to 350 million for composite companies, 200 million for non-life, and 150 million for life. I think by this time, the government had also realized that they had neglected the insurance industry for quite a while. You recollect that they moved capital for banking industry rather aggressively in the 90s, but that of insurance industry wasn't done. So the insurance industry became a bit of a laggard. And again, they moved it in 2007, this time to 5 billion for composite companies, 3 billion for non-life, and 2 billion, for life. I think this period really shaped the insurance industry in the sense that fragmentation reduced significantly. Prior to 2004, we had 118 companies in the industry. Today, we have just about 50, 51, odd companies.
The industry has also changed in terms of regulation. The regulators in place right now are doing a great job. They're also bound by requirements of the IFRS. They're bound by requirements of the Financial Reporting Council, and a host of other things. So it's a totally different industry. Hitherto, it probably was operating in isolation, but right now it's fully integrated in the financial services sector.
Following by some accounts, successful recapitalization in the banking industry, it was generally accepted that the next frontier was going to be the insurance sector, and rightly so. The regulator embarked on that program, and by the time we were through in 2007, we moved from 103 insurance companies writing barely 100 billion naira to the 49 that we have today, more than doubling the industry premium income to close to 250 billion. Well, of course, there's still a lot that we need to do, but just looking at that parameter alone, I would say a lot has changed.
And if you think about the growth rate, in the 3 years before the consolidation, it was about 13%, and post recapitalization, it went to about 25%. So I think that was an inflection point for the sector, because you had larger, more capitalized players with improved systems, process, human capital quality.
These improvements, however, are not reflected in the stock market. Investors in insurance counters have endured significant losses over the last few years. Since 2009, the NSE Insurance Index has fallen more than 70%, with many insurance companies now trading at distressed valuations around their nominal values. Though the sharp decline was partly in line with the fall of the broader market, the recovery of insurance stocks significantly lags other sectors, implying that investors' confidence in underwriters remains low. The performance of insurance companies over the last few years has cast a shadow on several progressive steps in the industry over the last decade. Indeed, new capital requirements for life and non-life businesses has seen billions of naira injected into the sector. The fresh capital has sparked significant growth in the industry, with total industry premiums rising from under 100 billion naira in 2007 to over 250 billion by 2012. And the recapitalization of the sector did not only bring fresh funds into the industry, it also ushered in a new breed of insurance managers as part of a broader re-engineering of companies like Mansard Assurance and Custodian and Allied Insurance.
Mansard has grown at a compounded annual growth rate in excess of 80%, which means technically we've grown at 4 times the industry growth rate. We had a major turning point, which we like to call our renaissance, in 2004, when we restructured the company and we brought in new people, and we essentially started again. First of all, we tried to understand the market. We didn't just step out and start selling insurance. We carried out various research programs and tried to understand the customers, tried to understand the environment, tried to understand the distribution pattern, and so on and so forth.
Yeah, the key drivers of our growth, of course, is service delivery. Very critical for what we're doing over here, payment of claims, because it's first-time experience, typically that will bring about repeat business. We've also looked at growth from a strategic point of view, which is, aside from inorganic growth, we felt that we could grow through acquisitions and mergers, and we've consistently done that over the years.
Mansard and Custodian and Allied are relatively newcomers whose stocks are standout performers on the NSE, where most insurers have underperformed. The values reflect negative investor sentiments towards the sector, which has been fueled by weak corporate results. While the insurance sector is on a more solid footing, several factors have contributed to the struggles of most underwriters to turn the potential of the industry into solid financial profits.
There are still too many players for the volume of business. So if you look at the turnover, in other words, the gross premium income to net capital that people are using, there is hardly any capital turnover. In some cases, the capital may even be higher than the gross premium income. So where is the profit going to come from? A large debt overhang, receivables, that they carry. I think some of the companies, frankly, they can double their profit if the receivables issues, if they had been addressed as they are now being addressed.
A number of factors have affected the success of that consolidation. One, you had the crash in the capital market. That's generally known. So a lot of companies, the money that the value they got from that capitalization were lost in the capital market. Number two, of course, you have the general economic crisis that hit the wall, and that comes to that. That affected a lot of businesses in Nigeria. That affected the growth of the insurance sector. Then, thirdly, with the banking reform, there was a lot of credit squeeze. So all those small entities that were enjoying credit and they were being forced to take insurance, they just disappeared.
Other factors that depressed the performance of insurance companies include weak investment income linked to trading losses in the stock and bond markets between 2009 and 2011. This reflects poor risk management in many companies and translates into low insurance penetration levels relative to other markets across Africa.
You'd have to think about per capita income Wale, where we're coming from. We're coming from $300 per capita income. Many of these countries, even if you look at time, I think per capita income average is in excess of $6,000. We're still at 1,700. So you cannot divorce the earnings ability or capability of Nigerians, from this gap.
If you look at the penetration ratio, it is still the lowest in Africa at just about 1% compared to an average of over 3% across Africa. And if you look at the sheer size of our economy and the insurance industry relative to the economy, you know that we've practically not even scratched the opportunities in the surface. If you look at the ranking across the continent, we're probably number 4 or 5, with South Africa alone accounting for, by some accounts, about 80% of the total insurance premiums in Africa. And if you have a population, as we do have in Nigeria, of 150, 160, even 170, that by some accounts, having less than 2 million individuals carrying one form of insurance policy or the other, in itself it looks really very, very poor. But the flip side of it is it presents significant opportunities for upside growth in the industry. I think we have not done a very good job of communicating values to the insuring public. I think we have not done the best job that we could in terms of coming up with products that will respond to the real needs of the public. And I think we have not done as much as we could in terms of training and producing the right caliber in the right numbers in terms of the professionals and the human capacity type thing to be able to drive the industry to realize this potential that everybody agreed exists in the country.
I must say, when we talk about this issue of penetration, we must recognize that there's a mutually reinforcing relationship between economic development and level of insurance contribution to economic development. Yes, level of insurance premium affects development positively. Also, the level of development of the society, including things like the financial infrastructure and the culture of the people and the historical experience of people with insurance, also affect the level of insurance development.
The industry in Nigeria is still dominated by the non-life sector, the general business sector. Out of the odd 250 billion, you have close to 180 billion naira that is in the general business side, and just a little over 60 billion that is in the life sector. Both have grown, but the growth in the life sector has been a lot more remarkable. In 2007, we were doing under 20 billion in life. In 2011, it's gone up to almost like 3 times to about 60 billion. While the general business segment has also grown, but the growth in the life segment has more or less overshadowed the non-life segment. In the non-life, of course, the auto line is still dominant. The motor business, of course, you also have the fire and the general accidents. While for the life, it's predominantly group life. Of the 60-odd billion, group life will account for, close to 80%. And I think it's driven essentially by, interestingly, I must say, developments in sectors other than insurance directly.
A major reason for low penetration is the poor growth of the life insurance space.
Even though the insurers lost out, so to speak, in terms of insurers being seen as the traditional custodian of the pension business, now it's been created as a separate industry in Nigeria. But the spin-off of that is the group life business, which at the moment has really grown very rapidly. And going forward, there's also the opportunity to tap in when the current contributors start retiring, to then tap into the annuity business that should come out of it. Again, that is dependent on the insurance industry being able to rise up to the occasion, sell the value of annuities as against the program withdrawal, which is the alternative that is being offered now.
Nigeria's legal reforms over the last decade are expected to provide a framework for insurance sector growth, with support from amendments to laws guiding the pension industry and laws that drive the participation of local companies in sectors like oil and gas. The change in the industry landscape has attracted a growing number of foreign investors to the sector.
In our interactions with people in international conferences, we have noted that a lot of people are interested in Nigeria We have, following the bank reform and the need for banks to divest from insurance entities, we have a number of companies that have participated. We have INSEA Participation SA Holding. We have Mutual and Federal Insurance Company South Africa. We have Old Mutual from South Africa. We have MMI Holding, and from South Africa also. You have Salam Group from South Africa, and you have Assure Africa Holding. These are the companies that have come to buy into insurance companies, and they hold various stakes from 50-50 to up to 96%.
We see tremendous interest from foreign players trying to gain exposure to the Nigerian insurance sector. And they have a number of hurdles they need to scale. They need to be comfortable with the regulatory framework, and critically, they need to be comfortable with the party they're going to potentially acquire or partner with. And we see there are many deals in the works. On the domestic front, if you look at the 49 players, 20 have less than 1% market share. And these, I'll call them marginal players, are going to either have to combine to grow scale, and the larger players may also decide to embark on strategic M&A activity to get exposure to a particular subsector. Say, for instance, a strong non-life player wants exposure to the life insurance sector, or somebody wants exposure to marine insurance or oil and gas insurance. And we saw two reasonably sized players, Custodian and Allied, which is the leader, recently embark on a merger with Crusader. This is some of the domestic activity that we're going to see increasingly in Nigeria.
Coming up, we find out more about what is attracting foreign and strategic investors to Nigeria's insurance sector, and learn more about the more recent reforms that could make insurance companies a lot more attractive going forward.